Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall alongside Kevin Hinks over there at the CBO. We've got you covered from exchange to exchange. Time now for our cash tag segment. For that, we want to bring in our next guest. We've got Landon Swan, co-founder of LikeFolio. He's here with sentiment data on Costco. Costco's got earnings due after the bell today. The expectation is that revenue will top $86 billion. Adjusted EPS expected to come in at $5.81. But let's talk about your sentiment data. I did get a chance to look at this ahead of time. I was a little bit surprised. Landon, take us through your headlines here first.
Sure. So, I mean, Costco is a great company. I'll just start off with that. I mean, it is one of the top companies in the country. I think it's one of our core conviction companies at LikeFolio, so we believe strongly in it. That being said, one of the tough things about reporting on them for us is they publish their numbers every month. And so our quarterly outlook is 2/3 cut, right? Two-thirds of the quarterly outlook has already been released by Costco. But where it's at right now, the web visits are down about 2 points on a year-over-year basis, and it's kind of sliding a little bit. Interestingly enough, the sentiment is down. People are less happy with Costco for a strange reason. It's kind of the Yogi Berra quote. Nobody goes there anymore because it's too crowded. So that people are actually complaining about how crowded Costco is. So obviously that's good news for the company, but it's just interesting that it's leaking over into negative sentiment. You can see here though that down a little bit on a year-over-year basis. The bottom of the list, but I wouldn't put too much stock in that. Target, Walmart. Target especially was coming off some lows, so this is a year-over-year comparison. That one's easy to beat. Walmart's doing really well. I think Costco is just kind of hanging in there right now. And what we're seeing is it's just a very strong company with strong numbers. I mean, you look at their July sales that were up 8.5 points year over year. Their digital sales, which are only 8% of revenue, but it's up 15% on a year-over-year basis, so double what the company's doing overall. So digital is really pushing them forward. It's small but growing, and they're putting a lot of money and energy into technology. So they're looking to alleviate the crowding problem with the scan-and-go checkouts, digital wallets, personalized online recommendations. All of these things are going to make more transactions happen more quickly, either online or in the store. So they're doing a lot of things right. It's just right now with the stock pulling back a little bit, sort of sideways. The data kind of supports that. It's not, it's not the sexiest of headlines, but we kind of agree with where the stock is at right now. Plus, again, the fact that they continually report these monthly numbers, we only have about 1/3 of the quarter to report on that hasn't been reported yet. So that's another reason why it just doesn't tend to move that much on quarterly reports, because those numbers are already out.
And in food inflation, right? It causes stress. It has appeared to make shoppers trade down to lower retailers, and that has favored the discounters. Costco, Amazon, Walmart. You have Kroger and Target in your data. I don't know if it favors them as much as it favors the other discounters, but what do you think? Why do you think, when loyalty is such a big part of what Costco does, that there's something? I mean, this stock, the last 12 months, Landon, not a great picture of their stock performance over the last 12 months. So this is a name that seems to be, now, I read 3 articles from 3 different analysts, and all of them, even where the stock is now, still talked about overall valuations being high. So what do you think it is that's making it? Is that part of it? You like the company, but you just don't want to buy the stock?
I think that's kind of the summation of it. Yeah, I mean, we think this is one of the best companies in the country, but you look at the stock and it's not that appealing based on valuation. But you're right on loyalty. I mean, they have over 90% renewal on their memberships on a year-over-year basis, so people just don't quit. They've increased their memberships by 10% year over year. They're kicking in like $1.2 billion a quarter on those fees. Their traffic is up 5.5%. Their ticket size isn't up much. But again, that kind of reflects, like you're talking about, everyone's trying to save more money. They're trying to get the deals. And so Costco, you go buy in bulk, you get great deals. And I think people just really enjoy belonging to this price club, basically, where you have to pay a little bit, but then you go and you reap the rewards. And not to mention their private label Kirkland. I mean, that's doing really well. It's also got some good tariff insulation there, so they have the ability to pivot and maneuver as needed. But it's a great place for consumers to save money, and that's how people see it. It's just a question of where's the, is the valuation priced correctly? What kind of growth are we seeing? We're not seeing a ton of growth in the company, even though their numbers are coming in strong. It's just on a year-over-year basis, people are not more and more enthusiastic because the bar is so high. They're very enthusiastic about Costco. So to get that to go to that next level, you really got to get out there and go high. So it's tough to beat what's already a high watermark for Costco on all of our year-over-year metrics. That's why they're negative too. It's not because they're struggling. It's because it was really high before, especially when you compare these numbers across to like a Target or a Walmart. Costco's doing really well, but the stock, again, I'm sure it's been frustrating for investors because from 860 up to 1080, now it's 940 or so. It's just kind of going sideways, as you guys showed. So, as enthusiastic as consumers are about shopping there, investors are about the opposite, about buying the stock.
I will say for a while I didn't get the hype around Costco. Not that I thought it was a bad place. I wasn't a member until this past year. And the first time I walked into one of those warehouses, I was overwhelmed. I got it because, honestly, I joined because of gas. But I see the allure there. However, I will say I noticed that Walmart's prices tend to be cheaper, but I like the produce better at Costco. So it's a dance, right? But I think my question is going to the price that you're talking about around shares. And I don't know if you have any insight on this, Landon. I mean, they haven't done a split in years, and you wonder if the part of it is just how expensive shares are, especially say compared to Walmart, because Walmart has outperformed Costco year to date. I mean, Walmart's up double digits year to date, and it seems like the demand is still there for Costco. So what's your thought on that as it relates to just the, a little bit more on the share price and the impact that maybe that's also holding investors back?
Yeah, I think for the retail investors, that could definitely be a factor. I mean, a $93 stock is more fun or exciting to buy than a $930 stock, even if you get, 10 times as many or 1/10, depending on which way you're talking about. So, yeah, I think that could probably be a good move for them. Obviously, when it comes to the big boys, the quant funds, hedge funds, they don't care, and they're investing their money where they want. But for the retail investor, absolutely, it's definitely more attractive to get that lower price. But I think they also want to see some kind of momentum in the stock. And the way that it's been trading, and you just don't have that. It's been a lot of chop, a lot of sideways, and it's just not doing much, despite the fact that probably everyone or close to everyone who owns Costco stock goes there and they see the place completely crowded. They know that when they walk in, they have a plan of spending $300 and they accidentally walk out spending $700 and they got a new TV. Like, it's just incredible what Costco does to people on the way in versus on the way out. So it's got to be frustrating for investors. I would just tell them, look, this is a fantastic company. I think it's one that you can buy shares in and kind of throw away the key, put it in the vault, throw away the key, check back in 10 years, and you're going to be doing just fine. The up and down chop of each monthly report or each quarterly report is going to be frustrating for a little while, but the data continues to be good. It's just the high water marks from a year ago are tough. That's why we're slightly negative on them on a year-over-year basis, but they're growing really quickly. When you think about what the business is, it's not a tech company. They're selling goods, so it's. I think they're doing a fantastic job. It's just maybe not the pace investors want right now.
Okay, so we'll check back in with you in 10 years. I'm just kidding. We'll talk to you, obviously, probably tomorrow, Landon. Also, good call, good take yesterday on the CarMax. You nailed that. Thank you, Landon. Appreciate that. That's Landon Swan, co-founder of LikeFolio. Have a great rest of your day, Landon. Now, for the trading perspective,